Good evening, investors. My name is Kevin Vincent. I'm part of the MarketsMojo's product team, and it's good to see you guys again. Today, I'll be taking you through all the features that we have on the platform, and at the end of the webinar, I hope that you know you can extract as much value from our platform as possible. That's my end goal. I hope you can. I hope you stick around with me till the end, and let's get started. So the disclaimer. We emphasize that all investors should use the information on the webinar merely as a resource to enhance their own research and understanding. Nothing discussed in this webinar should be considered investment advice. We strongly advise all participants to check with certified experts before taking any investment decisions. Investment in securities is subject to market risks. Past performance should not be construed as a guarantee for future returns. Investments in equity and equity-related securities involve a high degree of risk, and users should not invest unless they can afford to take the risk on their investment. So sad to say, guys, the 9th anniversary special offer has ended, and I hope you got the chance to take advantage of the offers that I was sharing and Dr. Mojo was sharing on the platform. But after some discussion with them and the product team, we have extended it only for 2 hours from now. So again, it's our discounts during the anniversary season are the lowest, and they are going to be the lowest across the year, throughout the year. These numbers are not going to go lower. So next year, the numbers during the anniversary season might not be at as low as this one, right? So take advantage while you still can. Extend if you extend at a very low rate of 24,999 over the span of 3 years, right? You buy it for 1 year, you get 2 years free. And if you can't afford that, you can just go for the next option, 17,999 for 1 year, and you get 2 years free. So keep in mind, guys. These numbers, these discounts have been high, are the highest right now. The discounts will not go even higher. The price, essentially, keeping it very simple, the prices are never going to be this low in the future. So take advantage, even during our best discount season, which is the anniversary season next year. These numbers might not be the same. So take advantage while you still can, and let's get started. All right. So our platform, MarketsMojo, is purely data-driven, right? In the investment space, there is a lot of In the investment space, there are a lot of biases that an investor faces, right? So this is something that when it comes to biases, I like to talk about biases here, emotional biases. So during the election period, right, we had the markets were extremely volatile. You could say that they had taken they essentially look like the crypto markets, like it's crazy volatility, up and down, right? So during those time periods, the extreme volatility tends to test the rationality of a person when it comes to investment decisions, and a lot of people were prey to a lot of biases, and the first one being FOMO, right? When the markets were falling, a lot of people just followed the market, and they just got out of the market. And once the market started to climb, they got back in. And again, once the markets fell again, I mean, it's just following the market. If you're the fear of missing out, FOMO, is something that a lot of people fall prey to, right? And at MarketsMojo, I mean, there are a lot of more biases, but I'll keep it very simple and short today. Our MarketsMojo's analysis cuts straight through all these biases and purely looks at data, right? So primarily people come at MarketsMojo to learn about the companies and also create like portfolios, analyze their portfolios. So let's start with analyzing a company, right? So once you click on MarketsMojo, you just put it in the URL. You essentially land on the Mojo feeds page where you'll get a specialized feeds coming for yourself. Right now, let's search for a company. Let's go for Natco Pharma. I want to investigate this company. So we'll research this company and I'll take you through how our stock page is structured and then essentially how you can take advantage of this. Right. Okay. So once you've searched for Natco Pharma, we essentially evaluate companies based on 4 factors, right? So as you see, there are 4 dots right here. This green dot, orange dot, and another 2 green dots, right? So we are going to talk about these 4 factors, right? The first one being quality, right? So quality represents the long-term fundamental strength of the company, right? And it is based on 3 more factors: the management risk of the company, the growth of the company, and the capital structure of the company, right? So when it comes to the growth of the company, we are looking at the long-term fundamental strength of the company. So we are looking at the 5 years growth, how it's been looking from a sales perspective. Has the sales been growing? What about EBIT? How's the growth rate for EBIT looking over the last 5 years, right? What is the capital structure? What is the capital structure looking like? So when capital structure, the question that we are essentially answering here is that, or we're trying to answer is that, how much debt is in the company? What is the company's debt serviceability ratio looking like? Keeping it very simple, is basically, can the company afford to pay its interest payments, right? Can it afford to do so? And the third one is management risk, right? Now, management risk, I just told you that MarketsMojo is primarily data driven, right? So evaluating management, like, that's a subjective thing, is something that a lot of people might think about, right? So what we do is, we are not looking at the who of the company, who's of the management, rather we are looking at the what. So our principle here is that if the company is being managed well, it will be reflected in the numbers. It will be reflected in your ROE. It will be reflected in your ROC, in the institutional holdings, the number of pledged shares it has, the dividend payout ratio, and so on. So the idea is that although this looks like a subjective factor, we are looking purely on data here. It's completely data driven. So quality, again, to reiterate, is the long-term fundamental strength of the company. It looks at the growth of the company, the capital structure, and the management risk, right? Now, the quality dot is also, I think I would say, one of the most important factors amongst these 4, solely because it is the gatekeeper of the company. So if the company's quality is not looking good, but the other 4 factors are looking good, it might still overall not be a great company. I'll get to that, how these 4 dots connect, but I'll get to that. So moving on to the next dot, right? Valuation. Now valuation, this factor is a very common factor. Often a lot of investors in the space have at least heard of the term valuation, right? Valuation is, if the valuation is fair, it's an okay company. You don't need to, the general consensus has usually been, if it's a very expensive company, in this case, if the company lies in above 1800, it is a very expensive company, right? And the instinct is to immediately come and sell this company, short this company. Similarly, if the company is below 110 rupees, it is a very attractive company and you should buy it. The instinct is kind of right, but we are not looking simply based on this. So, to understand the valuation of the company, I'll tell you essentially how we come to this range, how we figure out what the range, price ranges are for these for the scale here. So we do not use we do not use discounted cash flow method for understanding the valuation of the company, purely because there is a lot of estimation risk that comes with it. Meaning, अगर आपका growth rate या आपका discount rate, right, अगर थोड़े से भी हिल गया है, your intrinsic value is going to be very different, right? So what we do is, we do something else. We do relative valuation. Relative valuation essentially is looking at is comparing the benchmark of the company. It is basically looking at the price multiples or your earnings multiples, and is looking at the benchmark and seeing if the company's own price or earnings multiples is above it or under it, right? But that's not it, right? We are not just looking at our system is not as simple as that. We are also seeing we're also trying to see if the numbers justify, if there is some justification to these classifications. So, for example, if the benchmark is, if let's say if the company Natco Pharma's price multiples are above the benchmark, right? If the benchmark is right here and Natco Pharma's price multiples are over here, it is not. It could be that it is expensive, or it could be that the fundamentals are so strong that it demands that level of premium, right? Similarly, if the company is not is below the benchmark, it doesn't automatically mean that it's a very attractive company, you should just buy it. It could also mean that the company is not doing fundamentally that well, and it doesn't demand that premium, and it's essentially being discounted by the market. So we are not just looking at, we're just not looking at where the industry stands. We're also looking at we're also comparing it against its own past, against its own fundamentals, and against obviously its benchmark in its industry, right? So that is how we come up with these valuation ranges. And for you, maybe this we have kept it very simple for you guys. You can just look at this and understand what the valuation stands at. Again, this is a long-term driver of the company, similar to quality. Quality is also a long-term driver of the company, and so is the valuation. Now we'll focus on the short-term drivers of the company. So this the third dot, right? So keep in mind that these are all dots that I'm referring to. The first one was quality, second was valuation. See, the quality was green, right? It's green right here. The second one was valuation is fair, it's fair right here, right? So the next one is financial trend, right? Financial trend is essentially evaluating the latest quarterly result of the company versus its past quarterly results, right? So I'll essentially demonstrate how the CFT score works, right? The CFT score meaning your financial trend score right here. It's 23 for Natco Pharma. Right. So what our system does is basically once the quarterly results are published, right? It basically looks at a lot of key important data points and evaluates it. For example, let's look at PAT in this case, right? The profit after tax. Now, what is the profit after tax in the latest quarter, right? So in the latest quarter, it stands at 386 crores, 0.3 crores, right? Now, how good or bad is it, right? On a QQ basis, on a YOY basis, has it grown? What is it looking like? Is it done well compared to its own past? So it is looking at a lot of different data points, is learning more about it, and essentially is coming up with a score. So now I've just spoken about PAT. It is also taking care of it's also evaluating a lot more points than just other than just PAT. Okay, net sales is another important factor, and a lot more. Like explaining this will take another couple of hours, and I've been told that I stretched the webinars too long, so I'll keep it short this time. Again, it essentially boils down to a score of 23. Now, on the right side, basically, if you look at it, it's a CFT score. If you realize that these are the bar graph represents the CFT score, the financial trend score, and the price chart essentially, and it is also combined with the price movement of the company. So as you see, there is a bit of trend basically after posting significantly better quarterly results, right? Right from December till today, consistently has been posting some good performance, and the market has started to realize that and has started to reward the company. Now, when it comes to the correlation of the price and the CFT score, I would say it isn't really fixed per se, but generally what we have witnessed is that whenever the company starts posting some strong quarterly performance, the markets will eventually, start to reward the company, right? So now we have this is the third dot, and it's a financial trend. It's basically looking at the quarterly performance of the company. The fourth dot, and I think this is something that everyone knows in the space, it's technical analysis, right? Now, in this case, a big disclaimer, by the way, before we get started about this dot, these are not intraday calls. We are looking at this purely from a long-term perspective. So we are looking at it from a weekly and a monthly scale, right? We have 7 indicators here: MACD, RSI, Bollinger Bands, Moving Average, KST, Dow, Theory, and OBV, and we are looking at it from a weekly, monthly basis. And what we're trying to do here is we are trying to not identify those short-term calls. Rather, we are trying to identify or establish a long-term trend of the company. Now, looking at these dots right here, like these are the legends of the table. We have reversed bearish and now has turned bullish. Now the triangle and the dot. So actually keeping it very simple, look at the triangle. You see the company, we had a triangle right here. The company turned bullish in 13th June, kind of almost 1 year ago, right? We have 12th June today. The price was at 631 rupees and the price is now at 1169 rupees. So that's done very well for itself, and I think it proves the point that these are not short-term calls, but essentially it's trying to establish a long-term trend here, and that's what it has done, right? So now we have evaluated the companies based on 4 factors, right? The first one is the first one is the quality, right? Green dot. The quality is looking good based on the management risk, growth, capital structure. Second one is the valuation. The valuation is looking very attractive. So the valuation is fair for the company, and again valuation is, as I mentioned, we're looking at it on a relative basis. Now these two are the long-term drivers of the company. It's fair again. So the dot is yellow, right? The financial trend, a short-term driver of the company is the score is 23 and it's very positive. Again a green dot. And technicals, the company is bullish, right? And again that represents a green dot right here, right? So now, Kevin, now you have told me everything about these 4 dots. Now what am I supposed to do with this? Great. Now what? The question, तुम बोलना क्या चाह रहे हो? तुमने इतना analysis दे दिया. Now what's next, right? So what's next is that we take these 4 dots and we come up with that one answer that answers the question as to what that was. The only question that everyone has is, should I buy it or not, right? So what we have done is we've taken these four scores and they work together such that it essentially spits out a score of 81 in this case, which is a strong buy on a scale of 0 to 100. And we have given out the score, we have given out our advice on the company. It's a strong buy. Now, why the strong buy? You can find all the rationals just under it. That the company has a low debt to equity ratio with the growth of net profits of 81.62. The declared very positive results. See, I told you about. So by the way, this is the quality I was referring to, the capital structure, right? How much debt is in the company? What is the latest quarterly results looking like right here? Stock is technically in the bullish range. The ROE, the valuation right here, it has a fair valuation with 3.6 price to book value and high institutional holdings. Now this is very interesting, and as you might have noticed, we have not covered that, and I am going to cover that. Right? So just to summarize, 4 dots, right? 4 dots. Quality, long-term fundamental. It's looking at the fundamental, long-term fundamental strength of the company. Second is valuation, very common. It's a very common evaluating factor for the company or for any company. Again, it's a long-term driver. The third one is the financial trend. It's looking at the latest quarterly results. And the fourth one is technical analysis, right? If it's the company is bullish or not, the price is bullish or not, bearish, it's your call. So in this case, so now we have evaluated them on 4 factors now, and we have come up with the score, right? But does it end there? No, it doesn't end there. We've taken it a step forward. So if you see, I've been navigating the stock research page with this menu right here, right? You can also do the same. So the next one is the price section that we have. Essentially, it will show what the latest price is looking like, what's the daily graph looking like. The markets are live. This essentially represents like a live ticker. You'll be able to see what is happening with the company. The company has hit a new all-time 52-week high of 11,188 today, right? And what's happening with the market, right? So you'll essentially be able to take advantage of this. The idea here we're trying to push is that on any stock page, you'll learn everything about the company, right? So, and the structure that we have in place right now, we have the return section. Now, what the structure we have for the rest of the stocks page is that on the left side, you have a summary card, and on the right side, if you want to dive into the data, scroll to the right? So over here we're giving you the returns performance. Now returns, the returns of the company. So now here we are looking at the 1 year performance, And I think this is something a lot of people get wrong in the market, is that, or rather based on my experience, I'm a young guy, my experience is not much, but whenever I speak to investors, dealing with angry calls, I hear that, the market is, my performance is, it's -1%. Just an example. Why is that the case? And when we, all I have to do is just tell them, sir, that you need to always look at it from a benchmark perspective. If I give you 100% tomorrow, right, that doesn't mean that I'm a god for you, right? You also need to look at the market's numbers, how the market has performed, right? If the market has done 1000% and I've given you 100%, you should kill me, right? So in this case, basically, what we have done is we have embraced this idea of having the performance, not just the price performance, rather a lot of key important data points on a relative basis against the benchmark, right? The benchmark could be the market, could be a peer, so on. So in this case, we have compared it with the Sensex and the sector, and it has outperformed both of them with a decent margin of 65%, 33% individually, right? The company is a low beta stock, so it's not very volatile, and it is a high risk, high return company. Beta meaning it's the sensitivity to the market. It's not extremely sensitive. Anyways, moving on. You can, as you scroll down, you can, by the way, scroll down as well. This is not the only navigation platform tool that you have in place. If you scroll down, you'll see news and updates on Natco Pharma. Now, on the right side, if you keep scrolling, you'll find all the news pieces of information, news-related information on Natco Pharma. And we have designed it in such a way that you won't have to, venture out looking for some other info. We have all of it is right here. All the important piece of information is loaded in the news section. You can just have a look at it there. Corporate actions, anything important coming, when are the results coming in, right? What is the dividends looking like, bonuses, right? So we can just click on full details, by the way, something that is available on almost all the cards that we have. Full details right here. Click on it. You will see board meetings. Okay, the latest board meeting was in May, and it was happened quite recently. And dividends, what is the dividends looking like? The last one was in Feb. Have there been any splits? There have been a split in 2015, so a long time ago. Bonuses, no bonuses in the last few years, no rights issues as well. So you can essentially learn all about the company. Essentially about all the corporate actions about the company right here, the news section. Financials, this section is for my CAs and the number-oriented people, right? On the left side, you have your summary card. On the right side, you essentially have, as I mentioned, the summary cards on the left. If you want to dive into the data, you can just scroll to the right and see. Now, these are all, these are all YY numbers. But you're also comparing it with, QOQ numbers, but you're also comparing it on a YY basis as well. Right, so it's showing the latest net sales in the latest quarter, 1,068 crores, and then again it's comparing on a QQ and a YY basis. The highlights are right here, and you'll find that for not just the quarterly results, for your half-yearly results, your 9-monthly results, annual results, P&L, balance sheet, cash flow, and more. And I think that's not more. That's it. Right. Keep in mind, guys, that all of the data is accessible. All you have to do is click on all data. You can see all the historical data right here. So it's the financial year of 2023 to 21, 2019. Now, if I want to look at standalone, you can do that. You can go further back as well. Now, I think it ends at 2014. If I want to compare it with a peer, I can choose a peer right here, right? Cipla, the numbers will change. I can change the quarter, the financial year of the company as well here, and so on. The absolute change, percentage change, it's all available, right? So that's that. Now, I told you in the beginning that when we were evaluating the dashboard, high institutional holdings, right? We looked at the 4 dots and we had like the 5th point, which I hadn't spoken about, and it is the shareholding of the company, right? I honestly like to, just look at this pie chart. It's often the most simple piece of information, yet is very insightful. Right, this pie chart is very straightforward. Everyone can read this. 49% Almost 50% is with the promoters, but not 50%. Insurance companies hold 5.58%, FIIs hold 16.14%, non-institutions hold 24.45%, and other DIIs hold almost nothing, right? But shareholding is again not a static number when people are going to buy and sell, and you can see it right here, right? Now, on the latest quarter, the promoters, actually, this has not changed. FIIs have slightly increased their stake compared to the previous quarter. Mutual funds have dumped their exposures slightly, and so have the insurance companies, and the DIs have pretty much, I would say, slightly increased their numbers, right? So you can essentially, and if you want to, see how the history has been in the past, you just click on the full details button, which is right here, right? You click on this and you can see all the historical numbers, March 24, December, all the last quarterly results. Promoter holdings, what are they looking like? Who owns the most? Who's the king in this company? And you can see it's Mr. VC, right? There are a few private liquid there are some private companies as well. There are a few individuals as well. So you can essentially understand who owns the company, by how much has it changed over the time period, and what is it right now, right? Now, okay. Now the next one is the company CV section. You can just click here, right here, and you can see who are the board of directors. If you're a salesman, never mind, it's a silly joke, but essentially you'll know who your top members are. The CEO of the company is Mr. Rajiv, and essentially you can learn more about the company as well, right? Click on full details right here, learn more about the company, what it does, and other than from a numbers standpoint, also know as to, so you can essentially see where the market could be heading. Do your own analysis at a certain point. I think that's a very good approach to use, right? And the last but not least, as I told you, looking at numbers from an individual perspective is not always the right way to look at things. So what we have done is we have looked at the we've compared the Mojo stock, the 3 dots, the 4 dots that I was referring to. We're looking at the quality, valuation, financial trend. Technical analysis is not being compared here, but we can look at what the dots are looking like for other companies. Now, in this case, Natco Pharma is right here. There is another better company, no, I won't say better company, but from a data perspective, Alembic Pharma has all the dots as green, right? This only has valuation as fair. If you look at this right here, the valuation looks fair for Natco Pharma, but Alembic Pharma, it is attractive. But on the other hand, the quality looks fine for the same. It's basically the same for both of them. But look at this. The financial trend score for Natco Pharma is 23, and the Alembic Pharma is 8, right? Actually, it's a classic way to see how these 4 dots work together. So we'll look at what the score of Alembic Pharma is. Now, the score for Natco Pharma, I think, is 81. I'll just confirm that. Go to dashboard. It's 81. So we'll see what the score of Alembic Pharma is, but I'll finish the compare with peer section. You can also look at, the individual. You can see what the peer quality looks like. You can click on full details and see the entire list. Now look at the scroll button right here. You're looking at the top peers in the chart, in the card outside. Right, you're looking at only a few companies right here. Click the full details, open Pandora's box. See all the companies, obviously all the peers. See 190 of them, right? And you can do the same for valuation and returns and shareholding. Now I am also kind of interested to see what the score for Alembic Pharma is. Let's click on that and see. I think it might be under it. Yes. So it is low. It is lower. The dots are all green, but I think the CFT score might have taken it up a bit. Anyways, so see, relative valuation sure looks good, but again, as I said, you have to look at it from a holistic perspective. It can't be, can't have tunnel vision, and you should essentially look at it from a holistic perspective. Anyway, so we have essentially at the moment evaluated the entire company. Obviously this was more of a crash course of how to research a company, but we have done it, right? We know a great deal of a decent amount of decent enough information on Natco Pharma, right? It is not bad. Obviously we've done it in 20 minutes, and so that's just 20 minutes. I mean, if you really dive into the data, to spend a couple of hours on this, you might, I think, be confident enough to ask questions in the con calls, right? So, anyways, so now we've learned how to research a company. Now, if you want to, learn about the company on the go, you'd also have an option of downloading research reports right here. Click on the download report button. You'll get the option of downloading a verdict report. Let it download for a bit. Give me a moment and I just need a 10-second break, please. All right, we're back. So now the report has been downloaded, right? So now now look at this, guys. 12th June, 9:34 p.m. That's essentially the time right now, meaning that these reports are live and are pushed out on a real-time basis, and it's all unique for each company. And I'll tell you how. Now let's look at the company's cover page. Natco Pharma, low debt. That's the key point. Very positive result. Bullish, fair valuation, high institutional holding. Some interesting, important but simple data points right here. Now the first page, and this is where essentially the standardization is out of the window. It's all unique and all of it is real-time basis. So the score is 81. Why it's a strong buy? I think we just went through that, but it's a bit more detailed out here. For each company, it'll be very different, right? Is this company for you? So we're looking at absolute risk-adjusted volatility of the company, and we're looking at the summary, the return summary. Now, what are the risks, right? Now, if you scroll down, you'll see that what is the average long-term fundamental strength of the company is with an average return of 12%. So it is not that great. The quality is good, but it could be better, right? The company has low debt to equity ratio. The debt is not much in the system, and the net profit, the growth in the net profit has been outstanding, right? So if you keep going down, see, the idea I'm trying to push here is that this report is 23 pages. But you can learn everything. Again, if we follow the same principle, basically the first page is for someone who does not have the time. And if you want to, go down the rabbit hole, basically you can just keep scrolling down, and you can just, dive into more and more data, right? Okay, so this is something interesting. I wanted to get to this part. Now this you might have not noticed out there. It is part of the Mojo stocks, right? And what does this mean? It is so Mojo stocks are the highest rated companies across the market. Less than 1% of the companies qualify as a Mojo stock, right? Now, what does this even mean, right? So I'll tell you what it is. It's exactly what it is. It's the top 1% of the companies across the market, and this is something that a lot of people have been asking since we started. When essentially we had just these four dots. A lot of people used to ask this question that where is the? Researching a company is all great and all, but I have a 9 to 5 job. मेरे को time नहीं है सब करने के लिए. Just help me out here. I'm willing to. I don't have the time. Just help me out. Give me the top 1% of the companies, and we'll accordingly take it from there. Just filter down the company to like the 1%. We did that for you guys. All you have to do is go to the stocks page, and right here, top Mojo stocks. Click on this. Right. Now we have the top 1% of the companies. Right now, these are the top 10 companies that are in the list right now. You can also look at it from a large cap perspective, mid cap perspective, small caps, and so on. And in each card, you'll also see what is. So this is the daily price and the change. So the change in price and percentage change, the industry, the market cap, what the score is looking like. I think now Natco Pharma. There we go. It was slightly down today. Score is 81 as identified. It was added a year ago almost, right? It has generated a return of 68%. Now, is that a good return or a bad return? depends on the benchmark, and the benchmark Sensex market is down by, sorry, not down, it only went up by 17.49%, while on the other hand, the sector has been up, but not higher than the company itself. So now we are giving all kinds of information. We are not trying to say that we are gods, we only pick the best of the best and we are the best. That's not what you're saying. We can also have the option of looking at all the companies, right, that have been in the list. We are not cherry picking these companies. You can find them in the full list right here. And now, as per these legends, the black stripe means that it's in the list, and the white means it's out of the list. So now this list has been filtered out, sorted based on the returns. So the highest one is 491%, and if you keep scrolling down, keep in mind that these are sure positive returns, but we have also not done positively for everybody. There are companies that have also done bad, right? We are not afraid to admit it. It's all up for we can essentially come down and view this. It's all available. But we are true to we are essentially, our company motto is honesty and trust, and it's all available out there for you to evaluate yourself. We don't want to, we're not trying to pull a fast one on you, right? So now these are the top rated Mojo stocks, and now we have learned how to research a company. And if you don't have time for that, we have also identified a list of companies that you could essentially evaluate, essentially start your research on. Now, or else if you're not the 9 to 5 job, but if you're like the 8 to 10 job, like a very busy guy, right? And you just want that one stock to invest in. Like, you don't have time for it. You don't have time to even look through the Mojo stocks. You don't know how to invest now, which we'll get to later. You just want that one stock that you'll invest in, and we have you covered on that aspect as well. All you have to do is go to the stocks page and click on the stock of the month right here. Right? Stock of the month is exactly what it means. Stock of the month is essentially the companies that have come into the platform. That is basically that one stock that you can invest in the month. Now, I'll tell you the process of how it works. Our CIO, Mr. Sunil Damania, essentially isolates the market based on the score. The higher the score, the better, right? And then accordingly, once he filters down the market based on the companies that have a very good score, he then sits with his a team of analysts, right? Evaluates each of these companies and sees which one has the highest potential for growth, right? And then he basically publishes the stock of the month on the 10th of each month. Now we just had a stock of the month published, Bikaji Foods, and it is since it has been announced, it's already doing well for itself. It's already up by 4-ish%. On the right side, if you keep on scrolling, you'll see all the older calls that are still active. Now some of them have been closed. Now Global Health was closed very recently. 7th June, it was closed a few days ago, and it generated a profits of 34%. Now what probably would have happened here is that a CIO is, by the way, keep in mind guys that we don't just recommend and just leave you out to dry, right? We are also looking at these companies. We're trying to understand. So now in this case, our CIO will be looking at these companies and is going to also see if that potential that he saw once he evaluated these companies is still there or not, right? Like, because companies are not always going to be static. The buy and hold strategy does not work all the time for all the companies. Now, so in this case, the company, the potential, we realized that it might be a good time to exit the company, and that's exactly what has happened. On the 7th of June, we have exited the company. So now, similarly, you can essentially, like as I mentioned for the stock of the month, for the Mojo stocks, you can also see all the past communications that were sent across, along with the performance. Now, or some of them have been closed, some of them are still active, and you can see all the performance right here, right? Performance, right? Now, I'll just pull out an old report. These are not just images. You can these are all research reports. You can just click on them, and I would honestly recommend you to go through these reports. These are, you essentially will get to understand the thinking process of our investment committee, and essentially you will learn essentially why this company was chosen and along with the investment argument. Now, what happens is that once on the 10th, the company is published, our CIO, or in this case, Mr. Mohit Batra himself, our founder, essentially came on the platform and published and told us exactly why this company has been chosen as the stock of the month. And there is often a very interactive Q&A session post the webinar, right? So post the conference, right? So that's what happened. So I've told you how to research a company, how to, if you don't have time for that, you can essentially look at like the top 1% of the companies. You can also then look at the, if you don't even have time for that, look at the stock of the month, like that one stock that you want to invest. You don't have time, just one stock, and we have you covered there as well. Right? So now you might have noticed that, like, I've been just giving you how to identify new opportunities, right? But, I think a lot of people in the space tend to forget that that is not where the journey ends, right? So the journey doesn't end at getting that stock idea, right? Once you learn that you can invest in Natco Pharma in this case, that's not an actual advice. Don't take it at face value. But let's say I've asked you to, you learn from your colleague there, that you can invest in Exide Industries. And let's say you are, you do your research and then you decide, okay, chalo, it looks good. Let's put, like a sizable amount in there. Now, once you do that, right, does the journey end? Like, what's happening there? Right? Like, आपने एक step ले लिया, identified the company, you put the money, and then next step, a lot of people just leave it there, right? Until the markets have really gone down, then they start to look at what's happening with the company. Should have sold a long time ago, and that is the part that that a lot of people miss. You identify the company, you have bought the company. Now you need to search the company, monitor the company, and then sell the company as well. That's where the journey ends, right? The cycle turns like that. So we have incorporated that, and I feel that personally that is the best way of doing it. The model portfolio, right? You have to, by the way, just to go to access the model portfolio. You need to go to the portfolio section, scroll down, look at the model portfolios, click right here, and this page will open. Now I already have 5 model portfolios running for myself. You can only have 5. In this case, I'll get rid of one of them. Hang on. So go to the portfolio page, click on model portfolio, and right. So now, if you're a new user, you don't have any model portfolios, you'll have a create portfolio box right here for everybody. Yeah, there we go. So now we essentially keep it very simple for you guys. You have 2 questions for you: how much money you want to invest. In this case, let's say you can only invest 2 lakhs. Let's put 200. Let's put 2 lakhs, please. That's 1,000 to 1,000, 2 lakhs. Correct. I want to invest 2 lakhs worth of. I want to invest 2 lakhs. Now, risk profile is very interesting and often again something that a lot of people tend to just forget or don't give much attention to. Every person has its own risk profile, right? So, during the past week, when the markets were volatile, like the only thing that was positive was the VIX index. So, in those cases, if the volatility didn't bother you at all, right? You are more likely an aggressive guy. You can afford to, you can stomach the volatility. You can afford to take that risk. Or on the other hand, if you were tearing your hair out of your head by looking at the prices, you are more likely a conservative guy, right? You can't stomach the volatility. You can't afford to take that much risk. Then you're more likely in the conservative section. And moderate is basically a balance between aggressive and conservative. So once you do identify which risk profile you fall under, you can then select your risk profile. In this case, I'm a young guy. I can afford to lose all of it because I just started my career. So, there is I'm in my mid 30s, 20s. So there is a lot of time till my retirement, right? So I can recoup my retirement retirement goal. I have a lot of decent runway, so I can generate it again. Hence, I'm an aggressive guy. I can take that risk, right? I've selected aggressive. I've read all the and understood the disclaimers. Generate my model portfolio. So now it is allocating across the highest rated stocks, now which is 10 stocks, allocating across 9 sectors. The highest sector being the auto industry. 100% of the company portfolio has excellent good quality, positive better financial trend, and mildly bullish to better technical trend. That's it. Right now you have it's mostly towards large cap to mid caps. Mid caps, there is a 40% exposure to it. The top sector is the auto industry, as we mentioned right here, defense, FMCG, domestic appliances, and other sectors. Other sectors will have a bunch of them. So now, sure, that's what the portfolio says. That's the portfolio that I've received. Now, keep in mind that this is not something that everyone will have. Now, meaning that it is not it's not a static portfolio. It's not a dummy loading page. It's actually doing what it says. Now, if you come in tomorrow and you generate a model portfolio, it is going to be very different for you. You might not have Siplov in this case. I'm just giving an example. The portfolio allocation will also be different, right? So the model portfolio that has been generated right here is going to be unique to me and only me, and it will, it is very likely that it will be different for you. Okay, so now, as I told you, now the investment ideas have been selected. Now, if you look at the left, the companies to buy is there. Now, what you don't have, when it comes to, getting that one tip or the 1% companies or the entire companies list, is that how much to put in the portfolio. How much to buy. Now, I don't know how much to buy. I might put the entire amount, but that is not the right approach. You need to look at it from a holistic perspective, right? So in this case, the quantity is 4, 68, 28 across all these companies. Value comes out to approximately 20,000 for all of them. Now, if you look at the allocation, it is no one goes to double digits. All of them are at restricted to 9.9%, right? That's not always the case. Some might even go above the 10% mark, but for me, this is the case, right? I click on continue, and now I have my entire deal sheet, right? I can take this, I can send it to my broker, or I can have it. I can just do it by myself as well. So you have your company name, the price you should invest this in, and the quantity, right? And you can just deploy it immediately. Click on OK, and you're set. Keep in mind that, I had put 2 lakhs in, it has only taken 1,90,000. The rest is in cash in hand, meaning that whenever there is a better opportunity that will come in, it will give an advice. So that's right. The cycle that didn't end here, by the way. हमने आपको advice दे दिया, and the advice is not stopped. We are now going to track this portfolio for you, and once the portfolio, there's something changes. If a company, if the company potential goes down, right, or the company is not looking good anymore, the fundamentals have started to deteriorate, we'll come up with a better option for you to invest in, right? So that's where we are at, and you can add more if you want to increase your exposure from 2 lakhs to let's say 5 lakhs. You can do so by clicking add investment and importing the how much more money you want to put in. So in this case, let's say put 3 lakhs. Okay, confirming it. Okay. Right. I'm not sure what happened there, but you get the idea, right? You can add investments, you can reduce investments, you can generate a new portfolio. Let's say a lot of people tend to do this. They'll have a portfolio for their father, mother, kids, and so on. So you can do that, and you can manage all your portfolios right here. You can view them all, right? And you can also get the opportunity of getting a model portfolio report as well, right? Keep in mind guys that even the portfolio has a score, right? So now this is how you generate a model portfolio. Now I hope now this is basically now that we have covered how to research a company. We have learned how to isolate a list of companies like the top 1%. We also you can also create your own strategies. We'll do that in the next time. But research all companies, that 1%, that one stock, right? And the right way, according to me, the right way of approaching your entire investment journey is the model portfolio approach. Cycle doesn't end here. It has to keep going, right? You need to churn out your portfolio, not very frequently, not like a trader. Whenever the company turns bad, you need to get rid of them and add a better one and put it back again. Anyways, that's it for the demo today. We'll take some questions today. So let's have some questions. Okay. I think we have two questions here now. Ram Prasad from Mr. Ram Prasad Ray, give model portfolio. I think so I just spoke about the model portfolio, but I think you might be referring to the mutual fund model portfolio. The mutual fund model portfolio is coming soon. It is in the I wouldn't say development stage, it's being developed right now. And I think within the span of 2 weeks, like Dr. Mohit Batra said, within 2 weeks, I think the product should be up and running. And we're kind of excited about that. It's in the design stage from the UI UX, and it should be out within at least 2 weeks, at the max 2 weeks. So I'm personally also looking forward to it. And we'll have my colleague Harshish will essentially take you through the platform, and we'll do a webinar then as well about it. Okay, the next question is from Mr. Rutuja. Dear sir, I am a member till 2078. Thank you for being part. Nothing other than loyalty. 2078 is equal to loyalty with MarketsMojo. I would like to understand as to how to assess stock quality based on industry quartile in returns section. Okay. Stock quality and returns section. So I'll maybe give you a better idea of what the quartiles are. Everyone can essentially take advantage of that. Let me just share my screen. Just hold on, Amir, 1 second. Please share my screen, sir. Okay, so so we are at the returns quartile right here. You can just click on this. So we are back to Natco Pharma again. Returns quartile. What is a quartile? For everyone, I didn't go through this today. I wanted to keep it short, but it's very interesting. It is basically giving you a quick view of the performance of the company, right, with its peers and with the overall market. So keeping it very simple for you guys, imagine there are 100 companies. We are going to basically sort these companies based on their performance, right, based on a certain time period. Now in this case, let's say we're looking at the latest QTD, quarter to date, right? So we're looking at that, the performance of the company. In this case, it is 23.24% for Natco Pharma. Now similarly, we have in this case we're looking at by industry. So we're looking at the industry numbers. We'll have all in let's take a simple example. I don't want to overcomplicate this. Let's say there are 100 companies. Now, out of 1 to 100 companies, we'll sort them based on the performance, right? And basically, we'll bucket them on a 25-25. We'll basically split the data on 25% basis. Now, the companies that belong to the first quartile, right, will be the 1 to 25 companies that rank based on the performance of the company. And similarly, the companies that have performance that rank 25 to 50 will come in the second quartile and third quartile and fourth quartile, so on, right? So here now that is quartiles explained, right? Now we are looking at it from an industry and market cap perspective. Now, see, sir, what is the name? I can't recollect. But basically, sir, you need to understand, and maybe everyone should definitely take advantage of this. We have like an information icon right here. Just click on this always, and you will see all information you need, right? Like, sir, the questions that you had, we'll always, we have, we know that it's, data and data, it's a bit complicated data. Not this one. I mean, finance is intimidating for a lot of people, so I've kept it simple for everyone. You'll find all this, the information icon, you'll find it very helpful, right? So in this case, the company belongs in the first quartile on a QTD basis on the December to March, the previous quarter. It still is in the top first quartile, but before that, the performance was not well. So it's in the fourth quartile, like it is ranked between the 75th and the 100th stock, like that is in my example, right? Now looking at YTD basis and the year of 2023 and 2022, now essentially based on this we can say that the company is not really a consistent performer, right? Looking at the information, I can click on it and you can, as I mentioned, all of you can, this doesn't add much, but essentially hopefully I've added value here. Essentially it's telling if the company is a consistent performer or not, right? So, sir, I hope I was able to answer the question. When it comes to quality, sir, the quality, just to be very clear, quality. We also have a quality dot. We are evaluating the growth, the management risk, and the capital structure. Growth, we are looking at the growth rates of the long-term fundamental strength of the company. So the long-term meaning 5 years at least, the 5-year growth of the company. So we're looking at sales, EBIT, capital structure. What is our debt looking like? What is its service debt to what is its debt serviceability looking like, right? And management risk, again, basically if the company is being managed well, your ROC and ROEs will essentially reflect that. So the returns and quality dot, not much connections there, but essentially we're referring primarily on a consistency of the company's performance. Okay. So let's see if you have any more questions coming in. Good evening. Okay. How to update the model portfolio? The model portfolio, this question is from Mr. Vikram. How to update the model portfolio? The model portfolio is updated. You'll basically get an email. So we are tracking the portfolios for you. So आपको अगर कुछ change हो गया या the portfolio is updated, you will be notified with an email. You'll also you can come to the platform again and you can see it for yourself. If there are any updates, एक pop-up आ जाएगा, आपको बता देगा कि okay, these companies needs to be kicked out from your portfolio and these needs to be added to your portfolio. Simple as that, very straightforward. So that's how you don't need to update your portfolio. You can update it by adding or removing investments, right? The rest of it we are taking care of it. Okay, what are these? Okay, so we have a question from Mr. Goyal. It's what are these hidden turnarounds and reliable performance of the website? So, this is something that I spoke about in yesterday's webinar where we, I'll keep it very brief. It's already 8. It's been 1 hour already. So, sir, hidden turnarounds are basically these are strategies, right? Hidden turnarounds, we have reliable performers, then we have momentum now as well. Hidden turnaround ka basic idea is that it is basically companies that have just posted a outstanding performance, right? Quarterly performance. It has it has posted a performance which has broken the trend, right? Ab tak wo performance was it was not up to par. It was it was not doing that great, but then suddenly it has posted a very strong performance, and that's not it. But that is the general gist of what all the companies involved in the hidden turnarounds are. Reliable performers, and these are fairly aggressive. So it is very possible that you will often find companies that have a hold or a sell rating as well on these companies, because ये companies ने अब तक they are hidden turnarounds, they are just about to turn around, right? They are just turning around. वो time है उसको to get to that level, get to the buy level. So these fairly are very risky, and I would say this is ideal for people who have an aggressive risk profile, right? Reliable performers are basically kind of the opposite of hidden turnarounds. These are basically, as the name suggests, reliable performers. Like for they're basically something that like an like something that an old person can buy as well. Like it is very conservative. These companies have proven themselves, and essentially they are they're not going to be very volatile. Simple as that. I mean, there is much more to it. I would generally suggest you go and look at the web page. We have given much more info on that, and so on. Mr. Sham Singh asks, "Good evening, sir. When are you people launching the stock of the week?" The stock of the week is coming soon, sir. We are hoping to get it up and running at least within the next 2 weeks. It is that is our goal. The goal is to get within the next 2 weeks at least. Mr. Dr. Mohit Batra also claimed that we are pushing out a few new features, and something that a lot of people are excited about: the model portfolio for mutual funds as well as the stock of the week. And it should be coming soon. We are going to make a big deal out of it because it is a big deal. Okay. Right. We'll take another question. There we go. It's from Mr. Sundara. Dear sir, who will be monitor the model portfolio and all model portfolios, or is it on a random basis? So we are monitoring. It's not being monitored manually. It is being monitored by the system, and that's how it is. And I didn't understand the second part of the question, so some context would have been better there. But no worries. People, my email ID is Kevin, KEVIN @marketsmojo.com. You can shoot me an email there, and I can take your queries there as well. So Mr. Sundara, you can just shoot me. I didn't understand the question there properly. And again, guys, if you have any queries other than just what I've taken you through, we are a very I can help you out on any other problems if you are having any related to the product. We can. If you have any queries, if you have any questions regarding subscription, if you are having any problems with the product, you can just shoot me an email. I will get you a response quickly. My email ID is Kevin, KEVIN @marketsmojo.com. Right now, again, before we wind up, just wanted to highlight that the special offer is ending. Now we are only this was extended by 2 hours an hour ago, so we only have 1 hour left. Extension of 3 years is essentially available for all our clients at the moment, or to everybody at the moment, but it is only going to be applicable for another 1 hour from now. I understand that we give out a lot of discounts, but this discount is not going to be, the future discounts are not going to be as high as what we have right now. The percentages might be higher, but the number of years that you get along with it won't be, right? You won't get 2 years free. You won't even get 1 year free, right? So Mojo 1, again, 24,999 for 1 year, and you get 2 years free, essentially cutting your cost by 3. And at 83% discount, something that you would have had to shell out 1,50,000 for. Mojo Professional 17,999 for 1 year, and you get 2 years free, essentially coming down to 70% discount. So anyways, that's it for today. If you have any questions, again, I've given out my email ID. You can send me some queries, and again, next week we will, other than going through the platform, we'll also do an interesting webinar, an interesting presentation. I'm very excited. We and the analysts on the platform have come up, done some number crunching, and we have identified if the buy and hold strategy, does that work or not, right? So looking forward to presenting that to you guys not tomorrow, in the coming week. And till then, stay safe and Godspeed to you. Take care.